Good morning. 2020 Form 4562, Depreciation and Amortization. How to calculate a depreciation deduction for a rental real estate property. So if you are in a rental real estate business, we assume you purchased a property in 2020 to rent out. So your down payment was $30,000, your mortgage $90,000, your purchase price $120,000. So cost of the land $20,000. Calculate the depreciation deduction for your rental property. You got the property ready to rent out on March 1st, 2020. Okay, so to complete Form 4562 with your depreciation deduction, you could use Depreciation Spreadsheet and you will complete step 1 and let's see here. So rental property, so asset name, so we just name a rental property 1 and date of purchase. Let's see, yeah, that'll be that one. February 1st, 2020. The cost, let's see, 120,000. The land 20,000. Cost without the land. Remember, you do not depreciate land, you depreciate the building. So you have to calculate the cost of the building without the land included. So that's 100,000. Date placed in service, that's the date you got the property ready. Even if you have now rented out, that's the date it was available, and that's the date pretty much you put a sign in front that for rent or something like that. You know, that's the date you got the place ready, available, and you could rent it out at any time if you find a demand for it. So that's March 1st, 2020. Okay. So because it's a rental property, we assume that's an investment. So that's pretty much 100% to use. And a rental property, a property you purchase to rent out, a rental property by default in IRS eyes is an investment. Property is an investment, is a passive business activity. It has it's an income investment. Don't know if I'm calling it right, but it's not a business activities. Is more like an income portfolio, a passive activity. Therefore, section 179 is not you cannot claim section 179 for it unless you are in the business of a rental property. But if your rental property is classified you as an investor, you cannot claim section 179. So we didn't choose 100% business use, we choose investment use 100%, personal use 0%. So market value is pretty much the cost of the property without the land, 100,000. Business use, we have a formula there, so you'll notice that it's not calculating, but that's just pretty much the business percentage times the value of the basis of the property. And investment and business use cost is the investment percentage plus business percentage times the market value, and that's 100,000. And section 179 and special depreciation, they are not available for it. Basis for depreciation is going to be the business investment use cost minus section 179 minus special depreciation is $100,000, and property class is residential or rental. So that's the top part of step 1. So you can complete the top part right after you have the property and got it ready. Could complete that, and now we can use publication 940C to complete the bottom portion of step 1. So we know that we are going to use general depreciation system. So let's go to form 4562 part 3 section B for assets placed in service during the year. So we will look for the property class, and that's residential rental property, colon H, 19H. And you'll notice that it already have choices here for you. It's not that you have to choose much. So recovery period is 27.5 years, and the convention is mid-month, and the depreciation method is straight line. So we go back to our spreadsheet. We have GDS, we have the residential rental, we have GDS for the depreciation system, and that's what the section B is for. The depreciation method straight line. And the recovery period is 27.5. So when the form is already completed for you, you are not going to complete it. It's already there. And the top that is not, that's where you complete. So month and year placed in service, that part is left for you to complete it. For the other property asset is not, but for the rental property it is. So it will be March 1st. So March 1st, we'll go, and you have two options in case you have two properties put in service. So March 1st, so month and year pretty much is going to be, March 2020, or you can just put the full date. So if you want, and the table to use, so mid-month, we know that it is mid-month, yes, for convention. So now we'll look for the table that we will use. So we'll go to appendix. Now we'll go to publication 946, appendix A. So appendix A allows you to find the table, the rate table that you will use. The chart 1 is not going to work in our case. So you look for chart 2 in appendix A, page 69 of publication 946, how to depreciate property. So use this chart to find the correct percentage table to use for residential rental property and non-residential real property. So use chart 1 for all other property. Okay, so we know we are going to use GDS, straight line depreciation. The recovery period is 27.5, and the conversion is mid-month, and the class is residential rental. Therefore, for month or quarter placed in service any, the table rate to use is A6. So we will put A6 on our spreadsheet at the bottom of the step 1, and now we'll go look for that table to complete our step 2 of our spreadsheet, the depreciation spreadsheet. So step 2, we have rental, in the name, we have the depreciation total. By the time we are done depreciating the assets, the depreciation deduction for all the years should total to $100,000. So let's go find that A6 table. A6. So we just scroll down past pages in 9, and we have all those tables, and we are looking for table A6. And we found it. So table A6, residential rental property mid-month conversion straight line 27.5 years. So now you'll need to find the month the property was placed in service. It was March 1st, 2020. Let's go check our spreadsheet. That's why it's very important you keep track of those information. And March 1st, let's go back to our publication here. So you have the 12 month on top, and you find the month you place your asset in service. March is January, February, March. So March is 3. So all the rates under 3, we are going to copy that to our spreadsheet. The spreadsheet doesn't come with the rates. You found the rates and you fill out the spreadsheet with the rates. And you notice that they have year 2 to 9. So year 2 to 9 will have that same rate, and year 10 will have 3.637%, all the way to year 28. Year 28. So it's 27.5 years, but you depreciate it in pretty much 28 years. So let's bring the spreadsheet and then you just start completing the spreadsheet depreciation rate column with the rate. So year 1 we have 2.879%. Under year 3 is that 2.879%. Let's go back to our spreadsheet. Year 2, 3.636%, and year 2, 3.636%, all the way to year 9. So we have the same rate from year 2 to year 9, 3.636%, and year 10, 3.637%. And that's what we have. Year 11, 3.636%. So it's going to alternate all the way to year 28. Under column 3 is 2.576%. And we go to our spreadsheet. Year 8 is year 28 is 2.576%. So after you are done completing depreciation rates column in your depreciation spreadsheet, it'll automatically calculate the depreciation deduction for you for all the year. each time is going to take the depreciation for the basis for depreciation, the 100,000 times the rate for year 1, 100,000 times the rate for year 2, 100,000 times the rate for year 3, 100,000 times the rate in year 4, 100,000 times the rate in year 5, all the way to 100,000 times 5.700, 100,000 times 2.576% in year 28. So we click on the formula. You'll notice it is taking 100 times 2.576% in year 28. So each time you have to go back to the basis for depreciation times the rates for the year it corresponds to. And if I click on year 6, it's taking that 100 times the rate. And if it's well calculated, the total depreciation deduction should total to 100,000. If it's not, you either copy your rates around, the formula is broken somewhere. So we have that 100,000 here on top. So now depreciation balance. So pretty much what the depreciation balance is trying to do is for year 1 is going to take the 100,000 depreciation, the basis for depreciation, minus year 1 depreciation deduction that you claim 2,879, and the balance is 97,121. So year 2, you take the sum of deduction you claim in year 1 and the one you intend to claim in year 2, and you subtract that out of the 100,000 basis for depreciation. That's one way to do it. Another way to do it will just be to take the balance in year 1, 97,121 minus, 97,121 minus depreciation deduction you claim in year 2, 3,636. And you'll find the balance for year 2, 93,485. So, and then that 93,000 minus depreciation deduction you claim in year 3 will give you the depreciation balance in year 3. And by the time you get to year 28, the depreciation balance should be 0, because you will claim the depreciation balance in year 27 will be 2,576 minus the depreciation deduction to claim in year 28, 2,576 will give you 0. If it's not 0, the formula might have an issue. A lot of time, because it's a table, when you click enter, it might just copy the same formula all the way down in a real way, and you'll have a little window asking if you want to undo the formula, and you just click on the arrow and undo the formula, and the original formula will be back. But just make sure the spreadsheet is calculating right for you. So if you play the rental property in year 1, like in service in 2020, then you complete the column tax year. So the first deduction you'll take will be in 2021 in 2020. So you are going to file Form 4562 for 2020, and year 2 will be 2021, year 3 2022, and so forth. And we can just drag it down and it might come on, continue. So it might copy the same number sometimes, and with the little arrow here on the right side asking arrow fill option, you click on the little arrow and you click on, if you click on copy cell, that means you wanted to keep it the same number, but if you click on fill series, it will just fill it up for you. And then we just want to continue that, assuming is doing it the right way for us. Let's get it to 2020 for get it to year 28. So that means we'll finish depreciating that rental property in 2047, assuming we got all the year in. So, and having this depreciation spreadsheet and calculate the depreciation deduction to claim every single year set, knowing that your basis is not going to change every year, you just know what amount you are going to depreciate for that property is already there for you. And if you make an improvement to the rental property, you don't need to change the basis of your property. If you make an improvement that is depreciable, you depreciate that improvement. From the date that improvement was done is the date you place it in service. So you start depreciating that improvement from that point on. So that will be a separate depreciation. It's not going to change the basis of your assets. So as long as you have the rental property in service, renting it out, you'll be able to depreciate it all the way to 2047 if you still have it available to rent out in year 2047. So now that you calculate the depreciation deduction for year 1, 2879, that 2879 on your form 4562, 2879 will go in column G, depreciation deduction, and we have it in service in March 2020. You'll enter in column B, and the basis for depreciation excuse me, is 100,000, assuming I'm writing it right. Yes, that's what that is. And yeah, so for the first year, you'll add it here, and for the following year, if you don't place any other asset in service, your part 3, line 17 is where you'll be depreciating asset placed in service prior to the tax year you are filing for. But for the asset you place in service during the year, you have to complete section B, asset placed in service during 2020 tax year. So it's for the assets you place in service and you are claiming the first year depreciation. That's what this section B is for. And line 17 is for assets you have placed in service that you have been depreciating prior to the tax year you are filing for. Thank you so much for watching our videos. Thank you for listening to our podcast, and thank you for reading our blog, ninasoup.com. Yeah, and the spreadsheet is a very good one to help you track your rental properties, and that's pretty much how you depreciate a rental, a residential rental property over 27.5 years. We have the videos how to depreciate your asset and how to complete form 4562 in the playlist 2020 form 4562. We do have a blog article. We have articles on our website related to depreciation, and you'll find in the category how to depreciate a business asset. Thank you so much for your time. I'm Afiavi Ojune, Liberman, creators of Liberman Consulting L.L.C. YouTube channel, Liberman Consulting L.L.C. podcast, ninasoap.com, our blog, where you'll find links to publication 946. So far, the latest version is 2019. IRS has now released the newest version here as of February 2021. So you could look for it on irs.gov or on our website, ninasoap.com, under free download. You'll find links to Form 4562, 2020 Form 4562 on our free downloads as well under 2020 Federal Forms and Instructions. And we'll have all the links in the description. So we do have our online stores, including liberdownload.com for our digital products, spreadsheets, PDF, templates you need to manage your finances and your business successfully. We have liberlabel.com, custom apparels and stationeries, including office supplies. We have liberoutlets.com for resale products and ninasoap.com for natural products, including natural soap and towels made out of natural fibers. Thank you so much. We thank you very much, you all that subscribe to our channel, and we thank you so much for all your comments.